Good afternoon. I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And welcome to the Friday edition of the Smart Investing Daily Briefing. Well, today we're talking about be careful on Zika stocks. Now, actually Zika came out. We heard a lot more about the Olympics, and it keeps coming up and so forth. Well, if you're not sure what it is, it's a mosquito-borne infection which affects birth defects. And what this actually now, we've got cases in the U.S., so people are starting to think like, oh, maybe we can invest in the companies that will cure this or help this and so forth. But the problem is there's still a lot of uncertainty with Zika, so you got to be careful when you look at the companies that you think may benefit or have the cure.
Exactly, and one of the big questions to ask here is which company will have the contract? There's a lot of companies buying for a Zika contract. Which one's going to win? If your company doesn't win that contract, their stock price could fall out very quickly. Another thing to think about, profits and results can be disappointing. Even if a company gets the contract, I don't know what the profitability is going to be for the Zika virus. I mean, I know there's, I think, 36 cases that came about in Florida. I'm not sure on the number. It might have been 25 or 36. Don't know why it's those two, but pretty small amount right now. It's not a huge demand.
And many times you don't know what they bid to get that. There's that movie coming out, War Dogs, where they bid this contract and it was way low. So you don't know what these drug companies are doing to get the contract. So it's profits. And be careful the company that you buy. If it doesn't go through, that's still a good company afterwards. So think about what you're doing. Don't just jump in just because, oh, the Zika is going to help this company. With that, we look at a company that actually does have a possibility of doing that, and it's in vivo, I guess the way you say it, pharmaceuticals. We do see like a little pop here back in June, probably because of Zika coming out. Well, we see it was about a high of $11.20, now down to $8 a share. Be prepared for a lot of volatility. We do see the current price on $8.86, the high for the year $11.69, and a low $4.50. Let's look at the numbers for you to see if it's worth looking more into this company. Here, we do see now, here's a good example. Sales up 201%, but yet profits down 6.5%. They could have had a great product, they sold a lot of it, but made no profits on it. Look at the balance sheet, we see a current ratio of 4.2. I did check the cash for you, $134 million in cash and no debt on the balance sheet.
And cash flow is always so important. I always say cash is king. Want to have cash in your business. Not looking good here. Cash flow in 2016, negative $29 million, and that's even worse than it was in 2015 when it was negative $21 million. So we want to understand why is their cash flow negative. Like I said, earnings are not looking good, and going out to December 2017, it's estimated that they'll lose $1.16, and then 2018 estimated to be even worse at negative $1.31. This also means no target sell price since there are no positive earnings for the company.
Right. Very high risk company, and again, don't bet on them getting the contract for Zika because that may or may not happen, and then you're left with a company that could go from $8 a share down to $4. Yeah, even worse. Or one, or zero.
Yeah.
Alrighty, well, I hope you enjoyed this edition of the Smart Investing Daily Briefing. If you'd like the free report on the 5 big mistakes investors make,
give us a call at the office. Our phone number is 858-546-4306. And if you've missed any previous Smart Investing Daily Briefings, go to our website, smartinvesting2000.com.